Hi there. In this topic video, we're going to focus on an emerging trend in businesses in recent years, and that's the shift towards demergers and/or divestment of businesses. So for many years, businesses were essentially driven by the need to get bigger. The thought was that bigger was better. That, of course, now is changing. Many businesses have demerged in part to streamline their operations and become more efficient and ultimately more profitable. So let's have a look at demergers. A demerger is basically when a business decides to split into two or more separate firms. Why might this happen? Well, there are many motivations to think about, but essentially the key aim of a demerger is for a streamlined business to focus much more on its core businesses or its core products. And if it does that, it should be able to reduce unit costs and therefore improve profit margins. Of course, sometimes businesses become too big. We see diseconomies of scale. For example, communication worsens between different areas of a firm. Management becomes much more difficult and much more costly. So demergers could be a response to this in order to lower the risk of diseconomies of scale. And you could possibly think of an analysis diagram to use that. So if you get rid of some functions in the business, get rid of some overhead costs, lots of management, for example, that should bring down the fixed costs of a business and help to improve cost efficiency. Oftentimes, the motivation for demergers comes from activist shareholders who want the business to become more efficient, and they also want the business to sell off the non-performing assets, raise some money, and return that money to shareholders, which has the happy effect, of course, of increasing the share price. And sometimes a demerger can be a proactive but defensive tactic, possibly to avoid or reduce the attention of the country's competition authorities, who might be thinking that this big business simply has too much monopoly power in an industry. So divestment, for example, could be a way of allowing a merger or a takeover to go ahead. Here's a good example of a recent demerger, a big one. News Corporation split into two separate companies in 2012, Sky and Dow Jones. Sky in charge of Fox News and Sky TV, and Dow Jones focusing on the print side of the business. Dow Jones, the Wall Street Journal, New York Post, and a range of publishing businesses including HarperCollins. This was a very high profile demerger. And here are some other examples. The first one is nearly 20 years old now. In 1997, British Gas was formed following a demerger from British Gas PLC. So that demerger created Centrica, which essentially operates the gas network, and British Gas, which is a gas supplier to customers and to businesses. A couple of years back in Australia, Foster's Group decided to demerge its two main divisions, one to focus on beer and the other to focus on growing Foster's wine business. The US multinational food giant Zara Lee, they decided to divest themselves of their coffee business Dowie Egbear. And there's been some demergers in banks. The National Australia Bank is hoping to demerge Clydesdale and Yorkshire banks in the not too distant future. The pharmaceutical giant Pfizer recently sold, that's a divestment of course, an infant nutrition business to Nestle. The regional water monopoly, Severn Trent Water, decided to demerge its operations from the waste management business Biffa that it owned. And here's a really good example. PepsiCo, huge business, decided to demerge their food and drinks businesses by creating Yum Brands and their drinks business. And then in 2015, Yum Brands announced their own demerger to create two separate businesses, Yum China, clearly focusing on growth in that emerging economy, and Yum Brands. So those are good examples here of demergers. Essentially what's happening is that firms perhaps feel they've overstretched themselves, perhaps they've gone into areas in which they lack true market expertise, they fear diseconomies of scale, and they want to avoid that by streamlining their business through a process of demerger and or divestment. Hopefully that's given you some good examples for your revision notes, and that can fit into your overall revision notes on business growth and business economics. Thanks for logging in.